Hey everyone joining me. How's it going? I am still playing around with Demio, so bear with me here for a sec. If you guys do have any questions while we take a look at Austin today, throw them in the chat over on the right. I think I can bring people on stage or onto this with me. So this will be fun and interesting. Yeah, if you guys want to, where is everyone joining from? Always kind of like to know where people are joining from. But today we're taking a look at Austin, Texas, in terms of it being a place to invest in real estate. So if you joined me last week, we did a Gunkwit, Maine. That was super fun. I've only been once in real life, but it's making me want to go back to the New England area. Hey, Peter, Arkansas. I haven't been to Northwest Arkansas or Arkansas in general, so you have to let me know how it is there. So basically how this works, if you weren't here last week, I just use Nestment, our platform. We take a look at a city, kind of evaluate where some good investment opportunities are. Today we're doing Austin. And to start off, I thought it would be interesting to go over something that I think is pretty valuable for everybody. So if you would like to short-term rental a property that you end up buying in Austin, short-term rental regulations are different in every single city across the US, which makes things challenging. And you have to poke around on the city's website and see what the regulations are. Some cities have limits, minimums, maximums. Some cities across different things in terms of how many days you can rent it out, if the owner needs to be on site, if it needs to be owner occupied, if it doesn't need to be owner occupied, etc. So I went ahead and looked at Austin, and I pulled out some valuable nuggets. So it looks like it's a fairly friendly city to short-term rental a home. I did see this note about applications taking 8 to 10 weeks to process right now. So we're not the only ones looking to buy in Austin, 8 to 10 weeks. So keep that in mind if you are planning on buying an investment property and you want to Airbnb it there. You won't be generating any revenue for 2.5, maybe 3 months. So plan for that accordingly. Additionally, there is a pretty hefty application fee. So it's a little over $700 just to apply for a license. And then in addition to that, if you do get your application accepted, you do get your license, Austin says, hey, if you're putting your home on Airbnb, you're going to be subject to the same hotel tax that we're charging a normal hotel. So you're going to have to pay that to Austin and prove that you're paying it as well. So those are things to note about Austin. I think if anything, it shows the popularity in the area that I'm assuming everybody on this call knows about, and why we're all interested in Austin. Additionally, the PDF for Austin's STR ordinance and more information, there's a link with the STR ordinance or this PDF attached as well. Other than that, it looks like a fairly friendly city. I don't know. Has anybody been to Austin who's joining today? Interested in any areas near Austin or Austin proper mainly? Throw that in the chat and we can take a look at those. So without much further ado, knowing STR regulations, they're still giving permits to Airbnb a home. That makes me feel pretty good. So if you haven't used Nestment, highly recommend it. We can type in Austin and start taking a look. So we're going to zoom out of Austin proper. And keep in mind, I did do a little bit of research because there are so many homes for sale in Austin right now that I went ahead and I saved some of them that we'll get into. So when I'm using our platform and evaluating markets and listings, I typically go zoom out from the downtown proper area, and I start looking at listing thumbnails near the city center. We can see as these listings pop up, it's no surprise that a lot of these listings are well over $1 million, and I'm seeing the rates of return. So this is appreciation plus cash flow every year are negative. So this kind of doesn't surprise me. If you think about Austin, you know that it's been expanding and been super popular the last 10 years and specifically since COVID hit. So anywhere near the city center is going to be really expensive in terms of an investment opportunity. And most likely the appreciation isn't going to be all that high. And the rental cash flow is not going to cover your monthly payments. So this home is almost $5 million. So the appreciation is expected to be around 2% every year. The rental cash flow, not all that high. I don't know how many people are looking for 6 bedrooms in Austin. So that's my first kind of clue to zoom out of Austin downtown proper area. The homes are really expensive, and the rates of return, like the aggregate rates of return, are going to be negative. But that doesn't dissuade me from Austin. So I'm going to zoom out, and I'm going to set our max price to $800,000. So that's going to clear up some of the map for us. And we can kind of see 2 pockets, northeast and the southwest area. So when I was doing a little bit of research prior to this call, I started in the southwest area and some of these suburbs and started to see some more homes with positive rates of return. Some a lot more than others. And we'll get into why you see some of these expected to have an 18 to 19% rate of return, and others only expected to have an 8% return, which is still pretty great. So if you are using our app to look at Austin, I highly recommend looking at the southwest corner of Austin and some of these suburbs. And that makes sense, right? Austin proper, really impacted with construction. The homes are super overpriced and just a huge upfront investment. So a lot of these homes are going to have a smaller down payment, and that means a lower monthly payment, a better rate of return for you because they still rent out as an Airbnb quite nicely. Let's take a look at, let's see if we can click on this one. So this one, it's pending, but it's in that southwest quadrant of Austin. You can see it has an expected 3% per year appreciation over the next 5 years, which is good to know. And the expected amount of money that we can make per year is about $23,000 from putting it on Airbnb or VRBO. Which nets us with an overall rate of return of around 12%, which is really solid. So I'm going to keep that in mind and note that, a 3-bedroom home in Austin around this price, around $400,000, is probably going to give me a pretty solid rental cash flow. It's expected to be rented out 46% of the days of the year, and an average nightly rental rate or daily rental rate of a little over $200. What I'm going to do too is just scroll down to the bottom and see some comps from other Airbnbs in the area. These are all 2-bedroom, but you can see they're anywhere from $135 a night to $100 to $303. So if we wanted to go in and really customize the average daily rental rate, we can. And we can start to look at our monthly cash flow per person and what our monthly payment would be. So the Southwest area looking even better. Let's say we're just looking at this as investment and we only want to put $500,000 down, or we want a purchase price of $500,000. So it's going to clear up this area even more. And let's zoom in to Slaughter South. I love the name. This is the home that we just saw. Here is a 5-bedroom, 4-bath, $400,000. So the appreciation again is in this area of Austin about 3%. And the rental cash flow, because it's a 5-bedroom, is expected to be $37,000 per year. Again, these are estimates, but they're based on past performance of a home of 5 bedrooms, 4 baths in this area. So that's why we're getting a really impressive rate of return, right? The home isn't that expensive for the area, so our monthly payment isn't going to be terrible, and it's expected to rent out on Airbnb and VRBO for a nice rental cash flow. So 5 beds, 4 baths. Let's keep that in mind. You can see that I've already saved this listing. It feels like, and it makes sense that Austin, a place kind of known for music, partying, events, music festivals, that these are going to be groups of young people that are going to want to go to Austin and stay there. So more bedrooms means it can host a bigger group of people and generate a higher daily rental rate. So this one's expected to rent on average for $455 per night across the year and be rented out about 35% of the days out of the year. So this is a great little property. Makes sense that I already saved this. So if you're looking for something sub $500,000, look at Slaughter South. Looks like all of these listings in this neighborhood have a solid rate of return when you combine appreciation plus that rental cash flow. Let's move a little further south, Onion Creek. So this is further from Austin. So I don't know if the cash flow is going to be as high as some of those as Slaughter South. So it looks like the rental cash flow is fairly high. But let's see why the rate of return is a little bit lower than that Slaughter South area. It's because the appreciation is expected to be neutral. So again, on our app, we pull in and predict or estimate what the appreciation is specific to those neighborhoods. Let's see again for this area. Yeah, so neutral appreciation, which means a smaller rate of return. So your investment isn't necessarily going to grow in this little Onion Creek area, but you can still make a solid rate of return by putting it on Airbnb or VRBO. So I'm going to zoom out. So we've taken a look at this like southwest quadrant and identified it as maybe one of those kind of like hidden neighborhoods in Austin for an investment property. And so let's go to this northeast area where we also saw homes for under 500K. And I'm just going to take Peter. Sorry, I'm just looking at questions. We cannot sort by minimum rate of return yet. We are working on that feature though, and it should be out. We're hoping by the end of June, where you can sort by rate of return, appreciation, and cash flow. Great question. We're working on it because I'd like to use it right now as I'm kind of going through this with everybody. So let's look at this northeast quadrant. So we're seeing negative rates of return up in this northeast quadrant. When I was looking at Austin and prep for this, it feels like the north part of Austin, north of the Colorado River, has been built out and higher density and maybe got overheated in the last 5 years. And so the appreciation kind of in North Austin, general statement is it's going to be less than that south part of Austin. But let's click into maybe one of these properties that does have a solid rate of return. So this place is in, let's zoom in. This is in, we'll say Quail Creek, because it's on Quail Crest Drive, and it's predicted to have a 14% rate of return. Again, that's appreciation plus cash flow. It's a 4-bedroom. And just as I mentioned, appreciation in North Austin is going to be predicted to be lower than that south area. So keep that in mind. But the rental cash flow is fairly high, $37,000 a year by putting it on Airbnb, VRBO. And that's going to get you your overall aggregate rate of return of about 14.5%. And I have a feeling that the rental cash flow is so good here because it's 4 bedrooms. And we kind of have that hypothesis that more bedrooms in Austin, probably within reason, can rent for a higher rate just because people prefer a larger group size when they're visiting the city. This place is kind of cool and funky too. I mean, it's a little bit shabby, but kind of cool if you have some additional capital to really make this outdoor space fun and funky. Probably update the interior a little bit as well, but kind of a cool, funky Austin vibe. I like the fans on the porch. Yeah, this is a really interesting place. If you have a little extra money and kind of want to make it your own. I like the vibe of it. Let's take a look, maybe not $232,000. Let's go a little further east. Pioneer Crossings. Again, the rate of return on some of these northeast homes is going to be less. This looks like an interesting looking building. Appreciation 1.4%, rental cash flow only $17,000, and I have a feeling it's because it's only 3 bedrooms as compared to 4. Unfortunately, not a lot of photos of it, so it's not super interesting to me. So if we zoom out again, let's take a look at some of these further east places in the suburbs, and those are going, negative rates of return. This one seemed interesting on this lake. This is a Lake Walter E. Long. And this is an interesting, it's pending, but I'm curious as to maybe this area being, this is why the rate of return is expected to be almost 25%. The appreciation in this area of Austin is 7.8% per year, projected to be that for the next 5 years. And it has really impressive rental cash flow because it's a 4-bedroom. So a 25% rate of return. I'm going to go ahead and save this to my Austin, Texas group. So if you do want something for sure in like northeast Austin, look in this area near, stay on the lookout for anything in Lake Walter E. Long. That's super interesting. I wonder if on the other side of the freeway, these places in Forest Bluff are also expected to have really solid rates of return. And I wonder if it's because the appreciation is also 7.8%. So I'm going to add this one as well to my saved listings. So that's something super interesting that I didn't see in my initial research was this Forest Bluff neighborhood. So this is pretty cool if you want a place under 500K, well under 500K, around 400K, that has a really nice rate of return. Check out that Forest Bluff area. Let me see. Eric, are the rate of return estimates calculated based on short-term rental only? No. So the rates of return, I'll pull one up. They are rental cash flow from short-term rental plus the equity that you're building in appreciation. Because you're building equity when you have a home. That's the biggest kind of wealth multiplier is the appreciation. So the rate of return right now is short-term rental cash flow plus appreciation against your upfront costs, which we calculate per person down here. We are going to add long-term rental data shortly. We're hoping to have that by the end of June also, so that there will be a toggle here on the Nestment where you can toggle between short-term and long-term, and we'll pull in the long-term data that's estimated for this home in terms of the monthly rental rate is what will be here. And then it's assuming a 30-day rental to be a long-term rental. So we are going to include long-term rental data shortly if you don't want to Airbnb or VRBO it. And I'm going to show you guys another quick feature. We're going to look at some of the listings that I've already saved. So if you do have a Nestment account, they're free. You go to my groups, and I created a group just called Austin, Texas for this. And I saved some listings that are pretty interesting already. You can rank these listings with your friends by starring them, and then you can kind of compare them at a glance in terms of rates of return, rental cash flow, etc. And yes, Peter, we are going to have a sort by filter for those stats shortly as well, so that you can quickly sort the highest rate of return expected for a home, or the highest appreciation or highest cash flow, not just beds, baths, or highest price, lowest price, and newest saved. Let's take a look at this place. This is 8609 Cretis, Austin, Texas. So this is a 4-bed, 3-bath, a 2.3% appreciation, or with 2.3% appreciation expected, and a really solid cash flow of $45,000. So you get a really impressive rate of return. And again, this kind of goes back to a 4-bedroom home potentially earning you more because it's going to be rented out more. This is expected to be rented out 50% of the days of the year, and you can also charge on average a hefty amount more for those for that extra bedroom compared to a 3-bedroom place. Let's see if I saved a 3-bedroom. And here, looks like I've saved almost all 4 bedrooms because they cash flow so well. But to prove this, we'll go to this 5-bedroom home that's in Austin. So you can see that the cash flow is expected to be a lot higher than that 4-bedroom or the 3-bedroom. And the occupancy rate, that reason is it looks like it's going to be rented out, 3/4 of the year. So a 5-bedroom home in Austin is really going to be worth it if you can find one, under $500K, which might be hard, just for the rental cash flow alone. Keep in mind, a $900,000 home, your monthly payment is going to be a lot higher. Your down payment's going to be a lot higher. So if we compare this 5-bedroom home for $850,000 to this $400,000 5-bedroom home, we can see that the rates of return, this is expected to be 23, almost 24%, while this really nice $850,000 home is only 12.5%. And that's because your monthly payment is going to be so much smaller on your $400,000 home. Your upfront down payment is going to be much less, but you're still going to be bringing in so much in rental cash flow, $37,000 a year, that if you're going apples to apples and just looking at this as an investment, this $400,000 home is going to be, it's probably going to be a better bet than this $850,000 home. So there are still a lot of opportunities in Austin that are out of that downtown specific area. So initially, when I was looking at Austin, I thought that it had already been an overheated market. That it wasn't a great place to invest right now. So that was my initial thinking this week before I prepped for this market research call. And then when I started using our app and diving into some of these neighborhoods and suburbs like the Southwest and what we just discovered on this call. I think it was somewhere over here on the east. There are these pockets and there are these suburbs away from downtown that are really solid investment opportunities. And these are going to be what I suspect are neighborhoods where families are going to, want to live in these neighborhoods, hence the appreciation still being fairly high. And weren't just speculative like some of these, $4 million, $3 million homes right in the middle of Austin. I think it's going to be one of those cities that stays around for a really long time, has a really rich and deep culture. I think that it's going to be a place where people want to live, regardless of if tech stays there for the long haul. The music arts industry has always been there. So the infrastructure is being built. Clearly, if you go, you can see cranes everywhere. So Austin's not a bad place to continue looking at right now if you are interested in Austin. I think as one of our next markets, there's a couple other Texas markets I'm really interested in. One is Dallas-Fort Worth. Not as cool as Austin, in my opinion. I don't know how cool at all it is, to be honest. I was just there last week. But in terms of a really high growth city and the potential for the future, I think it's a really interesting city. And then a smaller, kind of more hidden city is Waco, Texas. So that's going to be between Austin and between Dallas that I'm very curious about. I'm curious about local people in Austin or Dallas or Houston that have been displaced and are looking for something more affordable for their families, something that's still very Texas and a little bit smaller. So you can see how many homes are for sale in Waco. But I'm going to save Waco for another market review call or market overview call like this. If you guys are interested in Austin and learning more, want to chat with us about Austin, you can either sign up for our Nestment 100 and book a call with us, and we can do a kickoff call, learn more about you and your group. The other way to talk to us in more detail is create a Nestment account and go to your group, and you can schedule a call with Emily. You can also schedule a call here to schedule a kickoff call and get in touch with us about Austin. I know that a bunch of groups who signed up have said Austin, Austin, Austin. So it's a place that interests us. And I'm excited to see what else happens in the future there. If anybody has any questions, throw them in the chat on the right. If not, we'll send a recording of this to everybody. And I'm trying to keep these to about 30 minutes. I'm doing them bi-weekly. If there's a place that you want me to look next on my next live sessions, please let me know. Also, just for you guys, I don't do this often. I will put my email address in the chat. You can either email me about a market that you'd like me to cover next or about Austin itself, and I can get you on a kickoff call with us. But thank you, everybody. Thank you, Peter. Thank you, Eric, for the great questions. Hopefully that, Austin is super fun. I try to limit my visits because it's so much fun. Let's see, Evelyn, kind of new to the Nestment. Do you refer property managers? Yes. We do refer property managers. We refer agents, property managers. We also have home insurance partners. We have property attorneys that we get you in touch with. And then we have loan officers that can get your group pre-approved and show you all the loans that are available to you in your group. So Nestment, it's free to use. Our service is free. We're with you every step of the way. We make money just as commission from if you use any of our partners, awesome. We get a commission from them. You don't have to use our partners. If you have an agent you love or a lender you love, you can go ahead and loop them in and still use us. So great questions, Evelyn, Eric, and Peter. And thank you, Amit, as well. And I will talk to you guys in 2 weeks, and have a lovely rest of your week, lovely weekend. Bye, everyone. Of course, red as I cough. Bye, guys.